Good morning, everyone. This is going to be another live trade commentary sort of video in which we'll take a look at the four major index markets. Now here I have the S&P, the Nasdaq, the Dow, and the Russell charts. We'll start off by taking a look at the S&P, where we've had a breach of our sign entry line. We've had the edge signal, so overbought, oversold confirmation. Along with, we're looking for an entry at the sign entry line. Looks like we may get that here shortly. If we do get that, our stop is outside of the volatility box cloud, so outside of these orange clouds. And that risk, the amount that we're going to be risking on this trade, is what we're looking to make as our first target. So that's really the anatomy of this trade. In this case, in the S&P, that's right around 5 points, so fairly simple. Let's move on next to the Dow. In the Dow, again, same breach, same sign entry line. This time we're a little away from our sign entry line here, so we would want a retest of that line for our entry price. Our stop is outside of the clouds, and we're looking at making that same risk for our first target. Second target is at the gray target line, and that's true on the S&P as well. Now let's move on to the Nasdaq. Nasdaq, very similar to the S&P, breach. We've had the edge signal. We're also closer to the sign entry line. We're actually getting that right now, pretty close to it. So far it looks like the S&P and the Nasdaq will give us entries. Dow a little bit extended away. Now finally onto the Russell. The Russell here, whole different volatility regime. We breached our sign entry line on the scalper. We had the edge signal, so this was a valid trade. We even had the opportunity to enter, and price just went outside of the cloud. So this was a stop out. That then caused us to adapt to volatility, switch over to the aggressive models. And this now allows us to try and see, okay, what is the volatility like in the Russell? So when we load in the aggressive here, you'll notice price action is doing a much better job of being contained inside of these models. Now we observe for the rest of the hour here, no trade. So as of right now, we have three breaches, 1, 2, and 3. The S&P and the Nasdaq look much closer in terms of giving us entries. The Dow here, so far, we haven't had that retest of the sign entry line. If we do get that pullback, the Dow will also be valid. But as of now, only the S&P and the Nasdaq are valid trades. Now, one other note that I'll add here is so far we've discussed our fade setups. That's where we're looking for moves away from our volatility box lines. We also have another setup, which is our trend setup. I'll link a video to it, but in the trend setup, we'd like to see trend, which is the market pulse, along with the squeeze arrows, either the slingshot squeeze or the squeeze signals, letting us know that we can play moves into our volatility box target lines. So here we have that. Our target lines are the gray target line from that hour. That's the move we're looking to target. We did get that in the S&P if we extrapolate that out, and that then took us into this reversal with the fade. If we switch over to the Dow, similar setup here. We had 1, 2, and 3 squeeze arrows. That then took us into the gray target line as well. So that trend setup also worked out, letting us know that so far trend moves are also working in at least the S&P and the Dow. Now in the Nasdaq here, we had just the one slingshot squeeze, so a little bit less strong, and we also had the same fade opportunity. And finally, we have the Russell, very similar setup here as well. Played moves into the aggressive box. The fade here was a stop out, as already mentioned, but the trend move, as you can see, was a much stronger trend. All right, so now let's see what happens with the fade. The S&P and the Nasdaq are the valid trades. The Dow has yet to hit our entry line, so there we're just in observation mode. And the Russell, we're trying to find what is the right volatility model to use using this hour as a test. Now I'll just let the video play. I'll try and manage my trade, but you can then take a look to see what actually ends up happening and get an idea of how price action reacts from the volatility box line. Leave the video running, it'll probably be faster. I'll add some background music when I edit, and hopefully this video serves as a good purpose of how entries work, how you can compare four different markets, and then how you can actually take advantage of that. All right, so I'll pause the video here, and then let's see what happens. All right, so a quick update here. Looks like we're starting to make our move towards our first target. We've actually hit the blue line, which is that first target zone. Our entry was at the cyan lines, which we had cued earlier on in the video. Our second target was at the gray target line on the opposite side. So in the case of, say, the S&P, that was a little bit closer versus the Nasdaq, a little bit further away. So your reward is better in the Nasdaq, but that also comes with having it be less likely in terms of the actual target being hit. Now the first target though, we've already hit. So we've taken money out of this trade now. For any remaining contracts you have, shares, options, whatever it is, we now want to make sure we don't lose any money. So we move our stop to break even, and that's pretty much the goal. Now we ride it all the way to that second target line, see if we hit it. If we do come back to the sign entry line, then that means we're stopped out of this trade at break even. So at this point, we're risking just unrealized gains. All of our realized gains, well, we have with the first target, and now we're looking to try and see how high is high in this case since they were long entries. So one other thing we can also do though is now that we know the S&P and the Nasdaq are the two trades that we care about, I can also get rid of the Dow and the Russell here. Let's just make this a two-pane chart. I'll leave the video running one more time, and we can see if we hit the second target in either of these markets. There's no guarantee, of course, always. Nobody knows what's going to happen, but probability suggests that we should hit, at least if we see a continuation move, from our entry price all the way up to the target line, which would make the entry look really nice, especially when you look backwards, especially if we see a really nice trending day from this point. That doesn't usually happen, but we've caught it many times before, and you never know when you'll actually catch it. So you have to follow the rules there. Stop at break even now looking to ride out the move to the second target. All right, so another little update here. Now at this point, the Nasdaq, the second batch of shares, contracts, whatever it was, those stopped out when we had price action reverse and we hit our sign entry line before making our move to T2. So in the Nasdaq now, the trade is done. We hit just our T1. That was a winner, and then we took off any remaining positions with that wick at the sign entry line, and that was it. So now the only active trade that we actually have is in the S&P, where now we're looking to target that upward move. You'll see here though the market pulse is turning a little bit green, so we may see this trend reversal. The S&P, we had the entry at the sign entry line. We never came close, so we got close, but we didn't stop out. And now we're just looking to see, hey, can we hit that second target line, which is pretty close in the S&P. We talked about this as well before, that the S&P, the second target was closer. The Nasdaq was a little bit further away, but if we did hit it on the Nasdaq, that would have been a nice trade. Anyways, now we manage the S&P. We'll see if we hit T2, and we'll keep you posted. All right, so a final end of day recap here. If we take a look to see what ended up happening, in the S&P, we had our entry at the sign entry line. We did make our move to T2, and that was pretty much all we got here. After that point, the S&P started to reverse. Price action came down lower, dropping even below our entry price into the close. And so that was pretty much the trade in the S&P. We had T1 and T2. We got in, we got out for our trade that we were looking for, but we did not see that same bolstering sort of trend that we're used to seeing on a few days at least, a trending days. And that was the case in the S&P. If we now switch our attention to the Nasdaq, we had just a T1 and our remaining shares, or contracts rather, were taken off at break even when we had that wick come right back down below. But what you should notice in the Nasdaq is price action here really continued. Hope this video helps. Take care everyone, and good luck trading compared to the S&P. In the next update. We grinded up higher. This would have been a nice one to be part of instead of getting stopped out on that second contract. But of course, we don't really know how things will go. It's just we follow the rules that we have. Next up, if we switch over to the Dow here, we had even a short opportunity. First, we didn't have the entry price that we did in the S&P and the Nasdaq for long. That was missed, but that strength was so strong that we triggered a short, which was also met with all of our rules, and that let you catch this really nice move down lower. So the Dow gave you a nice short opportunity here, and that was the only trade that we had in the Dow, which was a nice winner as well, T1 and T2. And then finally, let's switch over to the Russell. The Russell, we had the stop out early on in the morning. And outside of that, once we navigated to the aggressive models trying to adapt to volatility here, that was pretty much it for the rest of the day. You'll notice the Russell didn't really breach any other clouds. We just chopped around sideways in between our volatility box models. No real entry price, nothing that called for us to focus any attention onto the Russell. All right, so I hope this recap helps to give you an idea of how to navigate each day, trading with the volatility box, taking advantage of these models, and making some sense of the four major index markets. Take care, everyone. Good luck trading, and we'll see you in the next update.